Welcome to the Mayor of Money podcast with former Burlington Mayor Rick Goldring, CEO of Goldring Financial Leadership. In this podcast, we provide successful business owners with cutting-edge information and strategies in the areas of estate and financial planning, including wealth and risk management. The podcast also features exclusive interviews with very successful entrepreneurs that Rick has known and worked with during his career. Now, on to the show.
With me today on the Mayor of Money is Klint Rodgers of Axcess Capital Advisors. Now, Klint is what's called a registered dealing representative, and he's been in the exempt market since 2011. He's become one of the top producers in the country, representing 12 to 15 different private equity and private real estate investment firms at any given time. And he's licensed in British Columbia, Alberta, Saskatchewan, as well as Ontario with the Securities Commission. And for 3 out of the last 5 years, he's been recognized by Wealth Professionals magazine as a finalist for the best advisor in the alternative investment sector. Now, you're probably wondering what alternative investment sector means. We're going to get to that very shortly. But first of all, Klint, a warm welcome to the Mayor of Money podcast. Thank you very much for taking some time to educate us on what you do. I do want to state, though, a bit of a disclaimer, a bit of a legal disclaimer, that the views expressed in this presentation by Klint are his personal views and do not necessarily represent the views of Axcess Capital Partners or any of its staff. The information presented here does not constitute an offering of securities. Offerings are made pursuant to an offering memorandum and only available to qualified investors in jurisdictions of Canada who meet certain eligibility or minimum purchase requirements. And the risks of investing in any investment are outlined and detailed in the applicable offering memorandum. And you must review the offering memorandum in detail prior to investing. And investments are not guaranteed or insured, and the value of the investments may fluctuate. So we want to be really clear with that at the very beginning. Now we've got that out of the way. Klint, thanks for joining us. Can you just give us a snapshot as to what you do with regard to the title Registered Dealing Representative?
Absolutely. First, thanks, Rick, for having me on today. I really appreciate it. Glad the lawyers got paid. And again, as you mentioned, we're here for educational purposes as opposed to sell you anything. So sit back, relax, and enjoy. Myself, I am a registered dealing rep with Axcess Capital, which is a registrant with half a dozen or so of the securities commissions across the country. My job really is, as mentioned, to educate as opposed to sell, to try and match up clients' needs and wants to some of the products that might be on our shelf that could be well suited for a portion of their portfolio. So
why would a client use exempt market dealer, registered dealership like yourselves as opposed to anything else?
Yeah, so maybe the best way to answer that is to explain a little bit about our dealership. So my dealership, Axcess Capital, for example, is an IFM, so an investment fund manager, an RPM, a restricted portfolio manager, specifically to real estate and debt, and then what's called an EMD, an exempt market dealer. And that EMD allows us to sell these so-called private securities, otherwise known as exempt market products. And the reason you would use a dealership like ours is because our job is really to conduct a thorough amount of due diligence, which often takes anywhere from 3 months to 3 years, making sure that we have the right management with the right track record, with the right audited that is communicating effectively, that is going in the direction they said they were going to go in over a said period of time. And if all of these aspects check out, then and only then at that point in time will we vet through and approve them on our shelf for our friends, family, and clients alike to diversify into. And I will mention one more item there, and that is you are not paying any more to access these products via a dealership than if you were to go direct, because I am not paid by the client, I am paid by the asset manager.
So can individuals access the products, the investment strategies or tools that you have access to? Can they access these through their bank-owned brokerage firms and other public companies that offer financial investment planning?
More often than not, they are not as accessible through those so-called public advisory firms, if you will, right? Well, the banks and some of these outfits do have the product sometimes vetted through and approved behind the scenes. They also have access to thousands of products and therefore don't really know about the products that are on their shelf and or don't really have the relationships with these products, even if they were vetted and approved there. But the short answer is more often than not, they are only accessible via exempt market dealers and dealerships across the country.
So let's talk about the products. Then we'll get into the eligibility of being able to invest in these particular strategies. But how would you define the offerings that you have? And as I stated at the beginning, it's not just one offering. You have a dozen plus offerings of different types of investments. How would you characterize the type of investments or describe them to people?
Sure. Well, I represent residential, industrial, commercial, REITs, mixed, self-storage, care homes, car washes.
So REITs, so you got to define a REIT. Not everybody knows what a REIT is.
And so, and to answer that question, a REIT. So a REIT is a real estate investment trust. A private REIT is what's known as a Canadian mutual fund trust. It has a certain structure that's been approved by the Securities Commission that has certain rules and restrictions set to it. And that's also been approved by CRA that allows for tax efficient flow of distributions to investors and a certain income and growth type of eligibility and product that is all RSP and TFSA eligible.
So can you give us an example of the you say we were talking about REITs and real estate investment trusts, and you said private and you said public. Can we talk about the types of real estate that are included in some of these REITs or real estate investment trusts that you set up for your clients?
Sure. Well, I'll give you a good example. If I was to choose 4 of the REITs on our shelf, Centurion, Rise, Equiton, Avenue Living, those 4 asset managers represent over 40,000 residential rental units valued at over $11 billion. They all pay monthly distributions. They're all tax advantageous, so anywhere from 60 to 100% return of capital. They're all income and growth funds, and they are all RSP TFSA eligible. So those would be 4 great examples of some of the REITs that I personally represent.
So in those particular examples, you talked about residential units, and those are the focus of those particular REITs or real estate investment trusts. So in effect, what you're able to offer somebody is an alternative, and I'll make it simple. As opposed to buying a condominium apartment down the road and renting it out to somebody, you can invest in a REIT or real estate investment trust that you referred to and get rental income through the form of distributions that are paid on a regular basis within these funds. You can do it. You can invest in real estate that way, as opposed to directly in buying specific properties yourself.
Absolutely. And because of the scale of economies with a lot of these REITs, we're able to get better interest rates. We're able to reduce costs. The client no longer has to deal with the toilets and the tenants, if you will. And some of the returns to date have been exceptionally well, in the low to mid double digits to date. So,
and we just want to reiterate that past performance is no indicator of future performance.
100%.
So now, not everybody is eligible to invest in these particular strategies. Am I correct?
Yeah, so there's a few different guidelines that are set. There's basic investors, an eligible investor, accredited investor, and a permitted investor. I think for today, we could focus on both eligible and accredited investors, as that's where 95% of the so-called mature Canadian marketplace falls into. So an eligible investor, just quickly, is someone that earns $75,000 or more in a year before tax, or $125,000 with their spouse, or has over $400,000 in net financial assets, or has over $1 million in total net worth, which would include the properties. Those eligible investors are allowed in most provinces to do up to $100,000 per year in exempt or private security investments. And of course, that would be dependent upon concentration, suitability, and diversification. As it relates to accredited investors, just quickly, those are individuals that either earn $200,000 or more in income before tax, or $300,000 before tax with their spouse, or have over $1 million in net financial assets, or have over $5 million in total net worth. Now, these accredited investors have the luxury, I guess you would say, of investing whatever it is they want to some degree. And what I mean by that is the dealership carries liability. And again, it's our job to help protect, to explain risks, and to help clients understand and diversify their portfolio. So everything always goes back to compliance and getting to know the client and making sure we're matching up needs and wants, and that the suitability, risk tolerance, and concentration all make sense at any given time.
From what I can tell, many of these particular real estate investment trusts have had very successful track records. They've done extremely well. You mentioned low to mid double digit returns in the teens, or the 10 to 15% in that range. They've done extremely well. What would be a risk of investing in this type of structure? What's a negative that, because those numbers sound too good to be true. So what's the offset, if you will?
Sure. And I just want to tackle those numbers again. I mean, we want to under promise and over deliver. So to be very clear, if someone was to diversify into half a dozen different products on my shelf, typically we're going to average somewhere in the 8 to 12% range, with cash flow being paid monthly in and around the 5 to 6% range, right? Now, as it relates to some of the advantages or disadvantages or risks, if you will, private versus public. So the two biggest risks in the private market, in my opinion, are time and liquidity, okay? And what I mean by that is you're trading the ability to push a button and get out of your so-called public stock, if you will, instantaneously by having patient capital, that 3 to 5 year type capital. But by trading time and liquidity, you can often reduce or close to eliminate volatility and increase alpha. So in summary, time and liquidity are the two biggest risks. Time and liquidity, by giving them up, are the two biggest advantages.
Excellent. So the liquidity, can you expand on that? I mean, as you say, when you invest $100,000 in a mutual fund, as an example, you can invest it today and you can sell it tomorrow and get the money back almost instantaneously. What is the time frame, and what is the process of getting money out of some of these other investments that we're talking about?
It's a great question. And of course, every investment issuer is going to have a different time horizon and different redemption rules and restrictions. Having said that, in general terms, and we'll talk about the REITs, more often than not, we request a full 3-year commitment. Why we request that is because the client is not paying the dealing representative or dealership directly. They are paid through the fund indirectly. That's known as a cost of capital. And as a result, there's that trade-off for time, that patient capital. So while we request a full 3-year commitment, with the REITs on our shelf, typically you can get out with 30 to 60 days notice. And these REITs have never, at least the four I mentioned earlier, Centurion, Rise, Equiton, and Avenue Living, have never refused a redemption request today. So again, while you can get out in 30 to 60 days, we do ask for that full 3-year commitment. But knowing that if you want out sooner than later, there would be a small penalty. after the full 3-year commitment, there would be no penalty and you could just give notice anytime.
For people that are approaching retirement, or maybe getting ready to retire, what percentage of their portfolio would make sense to have invested in real estate investment trusts?
So we really need to use our own professional judgment here. We really need to do what's called a KYC, a know your client form, to get to know that individual, do an IFA, an investment financial assessment, to have a financial snapshot of their particular situation. But in general speaking terms, we don't like to go above 5 to 10% in any one specific product. And we typically don't like to go above 35 to 45% into exempt or private securities. Now, everybody's going to have a different risk tolerance, a different reason for investing, a different goal in the future. So it really comes back down to that individual. But in general terms, 5 to 10 in one product and no more than 35 to 45 into privates.
And I did ask the question about approaching retirement or in retirement. How or do these particular investment forms, can they work in retirement for people that need or want to receive an income, either from a registered retirement income fund or from a non-registered investment?
Yes, they can work very well, Rick. The reality is I've probably got a dozen products that pay monthly on our shelf. They're very consistent. Many of them are income and growth. So what that means is as that individual slips into retirement and their RSPs riff, we can often cover the cash flow required for the riff so that the size of your portfolio is actually not shrinking and often continues to grow. So the answer is yes, it's very well suited for monthly distributions.
Now, we live in interesting times. As we're taping this, where inflation has just been announced, what is it, over 8% now in Canada. We're taping this near the end of July, or end of June, I should say. And here we're leading up to the July bank rate, most likely bank rate increase for maybe 75 basis points in July to try to get a hold of inflation. So these are very, very interesting times. Interest rates going up, inflation going up, stock markets getting beat up, bond markets getting beat up. How to do those particular conditions that I just described, how does that impact the investments that we're talking about in your case?
Yeah, so I'm going to answer this in two parts. One, I'm going to reference in my mind what is known as the S&P TSX Capped REIT Index. So think publicly traded apartments, if you will, right? In 2008, obviously during the global crash, that particular index was down 38.3%. The private REIT index, which is known as the MSCI Real Pac Canadian Property Index, which started tracking in 1985, has never had a negative year. In 2008, it showed a positive 6.5% for the index. 2020, the public REIT index that I just referenced was down 13.1%. There was a lot of uncertainty when the coronavirus or global pandemic, as it started out, came into play. And once again, the private REIT index was up 5.7%. So first, I wanted to explain it in that fashion. Second, as it relates to inflation and interest rates and whatnot, it's a very interesting subject. I would encourage people to both look on the Bank of Canada website because there's a lot of great content. They are predicting that towards the end of 2023, inflation will settle back down to about 2.5% rate on their website. Unemployment continues to go down. Housing starts continue to go up. Net migration continues to go up. Retail sales continue to go up. So it is the strangest of times. And what I can tell you is the affordability factor is causing a lot of individuals to rent and to even second guess buying. And as a result, that gives us opportunity, both in private and public REITs, to increase value, both on the rents and by way of what's called net asset value in the growth of the fund. So hopefully that helps answer a portion of that question.
No, it does. You know, it's fascinating times that we're in right now. And in another podcast that I recorded a few weeks ago, same comment was made that as interest rates go up, it forces some people that would normally be looking at buying a home to the sidelines. And so more and more people will be looking at renting. And if you're owning one of these private REITs that you're referring to that has, I don't know how many units, 1,000 units or 5,000 homes or 10,000 homes, whatever it is, the expectation is that the value of those properties and the value of the rents should increase. But we don't know that's going to happen for sure, but the factors are there to suggest that. Did I explain that well?
Absolutely. And, you know, I will say we're poised for some great returns here over the next 12, 24 months looking forward. But again, time will tell. Let's find out.
Now, you're licensed in 4 provinces, I think you said, or I said.
That's right. British Columbia, Alberta, Saskatchewan, and Ontario. I believe our dealership is licensed in Manitoba as well.
So being in Vancouver is where you're located, but you're licensed for the other provinces except Manitoba between the Pacific Coast and Ontario. You're licensed in Ontario as well. I assume you do a lot of business in the same form that we're discussing today through the traditional Zoom or Teams or whatever virtual tools that allow us to connect.
Yeah, it's amazing. This has honestly been my best year in my career. And here we are in the middle of a global pandemic with a crisis going on in Russia and Ukraine, with energy prices shooting through the roof, inflation shooting through the roof, and yet the phone's ringing off the hook. So in short, I used to do a lot of traveling in the past, and thanks to everybody working a little bit more out of their home offices and becoming more friendly with, you know, Google Meetup, Zoom, and what have you. Yeah, the world's just shrunk once again. And so it allows us this opportunity that we're having today, Rick, to, you know, get to be a little more intimate and get to know one another a little bit further.
So Klint, if somebody is intrigued by the conversation that we're having and they do want to connect with you, what's the best way for them to do that?
Yeah, well, for those of you that know Rick, by all means, he can connect the two of us. Otherwise, you can definitely look me up on the internet. It's Klint Rodgers with Axcess Capital. And my phone number, 604-368-3454. And again, you can just go to Axcess Capital's website or LinkedIn to find me.
Yeah, it's a fascinating discussion. You know, we know that the factors that affecting real estate in general are only going to increase, or the demand for housing is only going to increase as more and more people immigrate to Canada. For over 400,000 people each year and 100,000 plus foreign students. The demand for housing is going to continue to increase, and that includes rental accommodation as well.
It sure does. Right now, the future's looking pretty bright.
Looking pretty bright for those that own real estate. Absolutely. Well, listen, this has been a great discussion. I really appreciate you enlightening us and providing some perspective and some expertise in explaining what it is you do and the licensing that's required and the difference between accredited and the other, I missed that, the accredited investor and what's the other one, Klint? Eligible and eligible investor as well. So listen, I want to say thank you very much to Klint Rodgers for joining me today on the Mayor of Money. He knows his stuff. He's a good guy to talk to with regard to these alternative forms of investment in real estate, and encourage you to reach out if it makes sense for you to do so. But listen, Klint, thank you very much. for sharing your insight and your wisdom. And thank you, everyone, for watching this episode of the Mayor of Money podcast. And we'll see you again next time. Thanks for tuning in.
Thank you for listening to the Mayor of Money podcast. Click the subscribe button below to be notified when new episodes become available. If you'd like to have a one-on-one discussion with Rick or have an idea for a particular guest or topic, contact him at rick@rickgoldring.com. See you next time on the Mayor of Money podcast.